Hello, I'm Sam Stovall, U.S. Equity Strategist for S&P Capital IQ. In this week's Sector Watch, I discussed our most recent Investment Policy Committee notes. The eastern shores of the Great Lakes are getting blanketed by lake-effect snow, while the rest of the country is enveloped by a deep freeze. Though too early to become overly alarming, concerns are rising that investor confidence could also soon begin to chill should the growth-slowing fallout from the current polar vortex become reminiscent of that of the first quarter of this year. Economic growth projections will likely become caveat-laden as economists await non-weather-influenced readings. Of course, a renewed weakness in housing could delay the first Fed rate hike, which may result in a further stay of execution for the current bull market. Our investment policy outlook remains positive, however, as employment and inflation trends continue to be supportive. From a technical perspective, the S&P 500 remains in bullish mode while above support at the 2012 through 24 levels. Yet we think the Russell 2000 must break above its September highs to see any meaningful upside in stocks. The index has instead breached lower support at 1158, which is a negative for the intermediate outlook for stocks. Separately, crude oil continues to decline within the descending trend channel. The bias remains to the downside while below the resistance zone of around $82, and especially while the trend channel remains intact. Finally, we see gold trading between the lower zone support at 1160 to 1173.5 and resistance between 1214 and 1233. I'm Sam Stovall, and I'll talk with you again next week.